Welcome to this week's Cattle Call. I'm Susan Littlefield on the Rural Radio Network. Quite the week so far. Had a bloodbath, as some described it early in the week with the way these cattle market traded. The big question, though, we'd have to rewind to Friday's numbers, that cattle on feed report that came out after the close. The big question is, who's feeding? And I don't mean who's doing the feeding, but who's doing the eating in these feed yards. We're really going to dive into what that means and how does that really relate to all this heifer retention talk we've heard out there. Also, some interesting bids have been coming in midweek. A lot of folks passing on the bids. We'll dive into that and a whole lot more. And who knows, there's got to be some crazy hand signal that will go on through all of this as we take a look at this week's cattle call. And as you can see, joining me is Brad Kooima. Brad is with Kooima Kooima Varilek out of Sioux Center, Iowa. And a side note, both of us had a perfect weekend with two major football wins taking place. I guess Monday Night Football, excellent win for our Vikings, a great win with the Gophers on Saturday. So, yep, even though for folks who know the whole thing about that hand signal, it makes for interesting trade talk come Monday. So let's kind of start there. Let's talk about this bloodbath that we saw Monday, Tuesday. Expected? Can we blame it on the algorithms? Who's the fault at all of this?
Well, we could probably share the blame right around. So being that I'm from Iowa, it's for my Iowa friends. I'm just kidding. If you guys don't know, this fair catch, right? You know, with the Iowa Hawkeyes and the Gophers, and we all know Susan's a big Minnesota fan. So anyway, thanks for having me on, and taking a little bit of a deep dive into the numbers. Obviously, that cattle and feed report certainly got us off on the wrong foot on Monday. I don't think it would have been as bad had it not been for some of the extra pressure on the market that comes from stuff like the geopolitical events with Israel, Ukraine. And if you listen to the news long enough, you'd make it, you would worry that the whole world's ready to explode, right? So some of that wish to be out of the market, I think you saw, and maybe from more participants than just the funds, some of the long speculators as well. So the stinger on feed number was the placement, 106%. Also on feed numbers, total at 101, which, if your listeners are gonna expect me to explain that 101 away, I'm sorry, I'm not gonna do a very good job of it, because I'm struggling a lot with how in the world the math comes up to that. We've got the smallest cow herd in 60 years. So you place some lighter cattle, but the placements, according to them, were up on every weight category, not just the lightweight category. You could blame the drought in the South still for some of those lighter cattle coming to feed earlier. But to understand where the placements come from, it comes from your lead in here. And you and I have talked about heifer retention ad nauseum. Here's a statistic. It's the largest number of heifers on feed on October 1. That's what this report is of as of October 1. It's the largest number of raw heifers on feed since 1996. That's when they started this style of reporting, by the way. So of that, 5% more placements than we thought, Susan. I mean, you could make an argument that almost 85% of that is because there was a lot more heifers in that mix than we thought. If you look at it as a percentage of steers, the heifer steer ratio, that's the highest it's been on October 1 since 2021. So, clearly, not only are we not retaining heifers, we're still placing, an unusual amount of them now. I'm sure, I don't know, people are wondering, I've been generally bullish here for a long time, right? So has this changed the landscape of things? Certainly does in the short term. These are the numbers, whether you believe them or not. These are numbers that we have to work with. So, after spanking this thing like this, you can tell that the long speculator got, he got put on the shelf here. You got markets that are abnormally undervalued. December cattle, typically this time of year, we'd be looking at fall lows. We'd be cleaning up the calf run in the north, and we'd be building in some expectation of tighter numbers and better demand going into December. So you'd have December cattle typically $4 or $5 over cash, not 5 or 6 under cash like it is right now. So, my hope would be that you also, if you can't recruit a buyer, you also have a hard time recruiting a seller down here. And maybe some of that is what happened here the first part of the week. Today was encouraging. Forward spreads worked. We got back on top of the things here and had a nice solid up day. So I'm hoping some of the volatility and some of the, the highest level of panic. Hopefully that's past us now.
Well, not one to question USDA numbers that come out, but where are they getting these heifer numbers from if there is the thought that we're keeping some back?
It's a very good question, and I don't have a very good answer.
Okay.
The placements generally were in more the corporate regions, particularly Texas, Kansas, Nebraska, Iowa up slightly. The only place noticeably down again is Colorado, which has been consistently down for almost going on a year now. So whether or not weather perhaps, maybe, I suppose, you get south of Interstate 80 and there's a lot of areas that still are uncomfortably dry, right? Maybe that still incentivizes these guys to move heifers stuff. But when I talk to producers even across the north, cow calf people, they tell me kind of the same story. They go, well, Brad, yeah, I'd like to save some heifers and maybe I will, but boy, I can't afford to turn down what people are willing to give me, for these feeder cattle, for a yearling heifer. And maybe it's a timing thing. I mean, feeder cattle prices were really high, right? So maybe these guys said, I'm going to take my money off the table. I'm going to sell these cattle. I might have waited a little longer. I might have waited till I weaned these calves. I might have waited for whatever, but they loved the price and they sold them. So, maybe we just borrowed a little bit of supply ahead from the next 2 or 3 months too. I don't know. Like I said, I have a hard time explaining the numbers. They don't match up with the way it feels to me. And frankly, they don't match up with what some of the data that we do know. Beef production year to date is down 5.2%, down 5.2% year to date. This is October. This isn't, we're talking about February and we're guessing. Actual slaughter is something like 3.7% less than a year ago on cattle. So if you're going to kill 3% less and you're going to tell me we got 101 on feed, you'd have had to place a ton of lighter cattle so that they're on feed longer, so they keep showing up report after report after report. It doesn't feel that way to me, but who am I to judge? Maybe we'll see that aberration here now in the next 2 or 3 months to balance it out.
So how long is the market then going to search for its value?
What's happened the last little while is that ultimately cash is king. Ultimately, the cash market decides that, all right, guys, you're coming with me. And I was very encouraged at the tone of the cash market yesterday and today up here in my part of the woods. The South has been pretty well resolved not to take these lower bids. The North, much the same. 84 bids being solicited here. Most asking prices around 85. I think we'll get that. That compares to, say, early in the week when we were panicking and there was trades at 84, 83, 82 and a half, maybe worse than that. So if that's the case, October at 181.12 don't look to be overvalued. December 179 something certainly don't look to be overvalued either. So let's start with stabilizing the cash and proving again that there aren't very many cattle fat right now, and nobody's going to make me believe there are. Nobody. You got a packer that's still making money, still wants to kill. Going into the holiday time, they're going to want to get some meat under their belt, and so hopefully that stabilizes things. Now, you get into this placement thing. If I'm going to build those into my supply model, Susan, it does change somewhat the supply in the first quarter, where I was the most optimistic that we were going to get the highest. I haven't thrown those models away yet. I'm working on it. I still think that if we continue to pull cattle forward, I still think the first quarter still looks like very supply side friendly to me.
All right. Hard to believe that next time when we talk, we'll be into November. What's your thoughts as we head into the next month?
Don't forget, we have turkey one day a year, so we got to make sure they get that demand bearish news in the market, right?
Yeah.
Some of us do. I don't know. I think what's important, let's get October off the screen here and move ahead into the next period of time where I frankly expect demand will get better in a bigger sense, and see if we can't take some of this discount out of the market and get us trading back where we belong again after this. I don't think the market would have been as bad had it not been for all this other stuff, fear of recession, fear of the Israeli thing and all this other stuff. So a little calming on that front wouldn't hurt us either.
All right. Sounds good. A few interceptions going on and it'll be a good week. What's the best way for folks to get a hold of you?
Well, we still have a phone, 800-358-3047. Call us anytime here from 7 until 3:30. I also, you can check us out on our website, kkvtrading.com, kkvtrading. Yep.
All right, just a reminder, commodity futures and options do involve a substantial risk of loss, not suitable to all investors. And that's this week's Cattle Call on the Rural Radio Network.